Our big message to Europe, dealing with all of the negative external shocks which are going to hit you, you have it in your own hand because you have so much room in order to produce, improve productivity in Europe. And so we are suggesting more action on EU reform in the single market, make it more integrated, build down internal trade barriers, move on the savings and investment union to have capital available for firms to scale up, increase labor mobility, and move on a more integrated energy market in order to bring energy costs down and affect the green transition. The differential in productivity growth between the US and the EU is stark. And that's what the focus, where the focus needs to be. And that's where the focus needs to be in terms of increasing potential growth and maintaining the European welfare state and social contracts in future. Because, as you alluded to, there will be spending pressures coming in the medium term. This is now defense spending. But there is aging, healthcare costs will increase. We estimate 5.75% of GDP increase in spending pressures for advanced Europe by 2050, 8% for emerging Europe. Those are large numbers and you need to deal with them. Part of that is also to look at where the fiscal balances stand and where debt levels stand. And it is clear that debt needs to be sustainable. And for many high debt countries, that means fiscal consolidation in order to bring debt on a downward path.
But is that appropriate, that call for fiscal consolidation in a time when spending is so much in need, given the challenges coming from the geopolitics?
Yes, it is appropriate. First of all, we have seen there's shock after shock. We had the pandemic. We had the Russian gas shut-off and the war in Ukraine, and now we have a shock coming from the tariff and trade side. In order to be ready and respond to the shocks and protect firms and the population, there needs to be fiscal buffers. These fiscal buffers need to be re-established. That's why consolidation is important. And it's also a good time to consolidate because you want to consolidate when you are in a recovery phase. And that recovery is continuing in Europe. You want to do that when you start growing, not when you are contracting. So that's an important issue. But consolidation needs to be on the agenda and needs to be firmly executed.